Hello, everybody. Welcome to the webinar. We'll be getting started at this time. My name is Troy. I'll be heading up the fundamental analysis webinar this evening. Before we get going, a quick systems check. Just type OK in the chat box if you're hearing. Okay, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know. Okay, so it's a good time for fundamental news. Obviously, we all know what the main driving story is right now. We'll get to it in a moment. Let's just go through some formalities first. One thing to keep in mind, all investments have their level of risk. Trading Forex, CFDs, spread betting, options trading also obviously have risk involved, but also just as obvious, there are some nice potential profits out there to be had as well if you go about things in a smart way, manage your risk on the downside, and plan accordingly with strategy and entry points, so that hopefully you can come out and be on top in the end, each week or each month. Certainly you're not going to profit every day typically, but hopefully more days positive than negative. That's what it's about. And if you want to read our full risk disclosure statement, it's on our main website, avatrade.com or avatrade.ca if you're joining us from Canada. And keep in mind as we go over things, it's not meant to be financial advisement, but it's coming from an educational perspective so that you can add some tools to your tool belt, so to speak, gain some extra knowledge and ideas to start building on your strategies and improving your outcomes, hopefully. There is, if we have time, we'll take a look at a nice tool that's available on the AvaGo app. For those of you who haven't seen it, we'll just spend a minute or two maybe to look at it. The AvaGo app is offered for mobile devices by AvaTrade. It's an app developed by AvaTrade that has some nice features on it that help you manage your risk. When you're putting stop loss, it calculates based on your trade size and the distance to your stop loss. It calculates for you like a trade calculator right there as you're setting up the trade what your exposure is. Okay, and same for take profit. It calculates your potential profit as you're putting trade size and marking a take profit spot, and tells you how much needs to go to margin. All this before you ever open the trade, so you have an idea of what you're getting yourself into in terms of the numbers before you place the trade. And then also there's the option on a lot of the assets, most all of the FX pairings, gold, silver, for a feature called AvaProtect, which allows you to protect for defined time periods, whether it be like 6 hours or 1 day or 3 days, against any losses that occur for a flat premium cost. And so it's similar to placing an options trade, really, if you know anything about options trading. But in a general sense, it's protection against losses for a flat cost. And if it goes the way you're intending, then okay, your cost was that small premium, and the rest of all of the profits on the proper movement are yours. And if everything goes wrong, which is possible in today's market with all the volatility, you've got just that small premium cost, and any losses during that time period are added completely back to your account. You can find more information about it from your account managers and on our website. Okay, so as we move forward, keep in mind, we've covered this each time. I don't think we need to spend a lot of time on this slide before we get into the live news and the live charts on my demo. Fundamental analysis is looking at the news reports, the economic numbers, the big driving stories that are out there, rather than looking at the movements on the chart, which is technical analysis, which we will do a bit of today, combined with our fundamental analysis. But the fundamental analysis, really, if you do that before you jump on the charts, you get an idea of what way you believe the wind is blowing, which direction you prefer to find entry points. Then you go in and do your technical analysis with a bit of bias towards the direction that you think the fundamental news is moving. And many times it helps you avoid some of the false breakthroughs, the false signals, and get in on more quality type movements. Okay. So there are two types of fundamental news that we talk about: regular economic events, which I think we're less concerned with right now, like PMI numbers coming out, factory numbers, production numbers, GDP numbers. They do have an effect still, but boy, this big overriding extraordinary news, which is the other type of fundamental news that isn't scheduled in terms of its scope or its timing, breaking news about this coronavirus, and you don't know what story is going to come out next. That's the type of fundamental news that we call extraordinary economic events. And certainly a global pandemic qualifies as extraordinary. So the regular economic events we can plan for in a more structured way. We know what they'll be about, when the announcements will be, what currency typically it will affect, etc. The extraordinary news, you just don't know when a breaking story could break, even other than the coronavirus. There could be a story, you know, right now Russia and OPEC have been battling with a price war with oil, which is driving oil down at really the worst time possible for the energy industry, because we've got recession fears now and a bear market because of the coronavirus, and now a price war where you know, the OPEC nations and Russia are purposely trying to price each other out with keeping production up, which is driving prices down. The reason I'm mentioning that is you don't know when the opposite story might break, right? What if an article came out right now that says OPEC and Russia agree to production cuts? What do you think would happen to oil price at that time? Okay, it probably would reverse and stop plunging and go shooting back up. So that type of fundamental news you also need to prepare for, meaning you can prepare with the known fundamental news, coronavirus, economic announcements that have come in, and then you also, within your trading plan, which is part of the risk management, should prepare for the unknown, extraordinary news that might happen at any time. And that's where you're setting up maybe hedge positions, pending orders, stop loss marks, just in case what you already know changes in terms of the fundamental news. And it can happen in an instant. Okay, so let's go ahead. Let's take a look at the fundamental news now. And if anyone has any questions, please feel free to go ahead and ask. We've got a big crowd this evening. If a lot of questions come in, I'll do my best to get to all of them. And it doesn't have to be questions. It certainly can be input as well. If there's something you want to add for the audience, I'm happy to share it. Okay, so I think this article says it all in terms of the fundamental news. Wall Street hammered as fears of virus-driven recession grow. And it's not just Wall Street, okay? It's not just the US, it's all around the world. The market's deep in the red, okay? I like to take a look when you're on investing.com right here. Let's ignore the headline for a second. We look here, everything is red. The futures were red starting the day out. You could have already been acting on that, and they plunged even further when US markets opened. Huge drops, setting records again and again for point movements. And you know, there have been a couple records set for point movements up in one day too. We not only have had down limits where the financial markets pause automatically when you drop 7% or X% in a short period of time. We've also reached up limits over the past week or so, where the Dow went up 2,000 points, you know, in a short period of time, and trading was paused. So huge potential with these movements, huge potential. And so if you read the fundamentals, you just had to know the market was going to plunge today. You had to know that this 2,000 point drop was likely to occur. The futures were red moving in all through the night, coming into the day, and when the markets open, boom, drop. Okay, easy to take advantage of when you know the fundamental news. Okay, for a while the markets pulled back up some. What would be your preferred move today when you see everything's in the red? And by the way, what's this VIX? Why is it the only thing that's green? Why is the VIX up 35%? What in the world is gaining in all of this horrible doom and gloom with this pandemic going around? Why is the VIX going up? What is that? Sitimbele? We don't know how long the virus will last. The experts really don't know for sure. If we use China and South Korea as an example, after about a month or so, the number of cases started dropping. Okay, so as each country reaches a peak, maybe after a month or so, there'll start to be less and less cases. And if that starts to happen in the US as well, you might see a huge rebound on the market, maybe a month from now or less. Okay, these markets aren't going to stay down forever, I promise. If you look in the history at the SARS pandemic, you know, the Spanish flu, the swine flu, all of these disease scares, they've always recovered in the end. The question is when? Timing, right? That's trading's all about timing. So if you're going to get in and pick a direction for a long-term move, you need to make sure that you're not overexposing with too big of a trade, right? You need to be able to hang on in case it drops the wrong way without exposing too much. So I tend to say I'm reading the fundamental news first, then making my decision. And that's what this webinar is about. Right now, does it look like the markets are ready for a recovery? I think in about 5 seconds, you can look here. And Kelly, you're right. The VIX index measures fear, volatility. Okay, it's the volatility index, or otherwise known as the fear index. So when this is going up, when the VIX is going up, typically the rest of the markets are dropping. Okay, so it was easy to see coming into the day today what might happen. Let's go ahead and take a look at a couple other things. Okay, so getting the idea right from the beginning, what's happening, then reading the headlines, we understand the direction that the governments are going. So we know, okay, big drop, Wall Street was slammed, everything's in the red, fear is up. What do we see in the headlines? Wall Street off lows, but sea of red continues as Fed steps in. The governments around the world are starting to give more and more support to their economies. First, the US dropped to near zero or at zero interest rate just recently. Other countries are doing the same to make money cheaper to get, to help businesses stay open. And now here the Fed in the US is buying a bunch of bonds, okay? Bond buying program to help the banks have more liquidity to loan to people. So more liquidity, lower interest rates, good for the markets, right? Imagine if this virus starts to be under control in some of these major countries, how quickly the markets could recover. It could be rapid. It really could be, okay? Because the fundamentals were there. If you remember the last NFP report, even a month after this whole thing got going in China, the last numbers out of the US were tremendous, like breaking records. So I don't think it'll take much for some of these economies to recover once the fear disappears, okay? But this right here was a sign markets were going to drop today. The VIX index, when I see it, it's even up over 10%. There's a sign that there's a scare on the market. So 35% up, wow, that's huge, okay? New to Thuzelo, yeah, when interest rates are being lowered, that helps people get money cheaper to maybe keep their businesses running, to keep things open. It's not a good sign that governments have to lower interest rates so low. It's a sign of weakness in the economy, but it is a positive thing in that it makes money cheaper. It allows more liquidity to be loaned out from the banks at cheaper rates, okay? Now, the question is, and here's a good one, and we'll talk about it when we look at the chart. If fear is up, why is gold dropping? If fear is up, why has gold been dropping? I mean, it dropped to 1450 today. You know, you see fear, markets are crashing. Traditionally, you think buy gold, should go up. And it keeps dropping and burning some people if they're going in too heavy. You know, gold is referred to as a safe haven, right? You invest in it for a time when you might need it, right? What's happening is people who are holding a lot of gold, as the price went up over the past months from 1,200 to 1,300 to 1,500 to 1,600 and up, now is the time as to why they bought gold. They cashed it in. There's so much fear that people want their money in their hands now. Businesses, companies, entities want to cash in their gold because you can't take a gold bar to go buy a house or to open a business or to pay your employees. You can't hand them a gold bar. So countries, entities, businesses, individuals have been selling gold to liquidate it and get cash in hand because the crisis is that bad. This is what they were buying gold for when there was a crisis, and gold's value got so high, it was the right time to sell it. And so it got to a point where the fear was so high that buying gold wasn't the option. People wanted their cash. And so even though the VIX index was going up, and typically you see gold rise when the fear index, the volatility index goes up, there was so much volatility, people wanted to get their cash in their hand. Okay, and when I say people, I mean entities also, businesses, those even governmental entities who invest in large amounts of gold. And this is really what's been driving gold price down, because bond prices weren't there anymore either to get much of a yield. There was so much demand for the safe haven of bonds that the bond prices went up and the yield, what they pay, went way down. And so then this is really what triggered the sell-off in gold as well. It's a trigger. Okay, so that's the situation with gold. Likely gold could come and recover back up some eventually as things start to stabilize a bit, and you'll get opportunistic buyers just say, hey, gold just came down X amount, maybe I'll buy in again for the next potential crisis. Okay, and this is the way gold operates. People buy in preparing for the next crisis, the crisis hits, and maybe they sell it off. Okay, so fear is good for price of gold. Overall, global gloom and doom may be bad for the price of gold if you were wanting it to keep climbing. Okay, so let's look at a couple more headlines. Just examples of government action to try and help what is a really bad economic situation. New York Fed adds $500 billion in overnight support to keep reserves ample. They're giving banks money, so they have money to loan out to help people. Same thing the Fed was doing, New York is doing. The Senate is trying to agree on a stimulus package in the US, okay? So we're looking at a stimulus package out of the Senate. We're looking at the state level adding stimulus. We're looking at federal level stimulus, on and on, okay? And then we can get to the other type of fundamental news as well, okay? Mendy, you're asking, do I think gold will rebound? I think there's a good potential for a pullback up eventually here. After all, each time you read an article, they're talking about an extended potential for an extended recession after this, okay? And I'm going to show you some reasons why. And this could be a driver of gold to potentially recover, okay? And so look at this news out of China right here. This was last night, okay? This is yesterday's numbers, last night. That was completely expected that their numbers would drop because, remember, China's numbers from last month and the prior month are just coming out now. And they were in like lockdown, 50 million people quarantined, that sort of thing. All their factories were shut down for weeks and weeks. Now those numbers are coming out, okay? As China's trying to ramp back up their factories now, as they've gotten the virus under control. And think about it, took them a couple months to get it under control. That could be the cycle in other countries as well, all right? So as China starts to come out of things, the numbers from when they had stuff shut down or coming in. This type of news out of the number 2 economy in the world, what do you think that does bigger picture for gold and for oil? Okay, economic slowdown, look at these numbers, worse than expected, asset investment, industrial production, down 13.5%. They expected it to drop from, a smaller increase from the prior, and look at the drop. Really, really bad numbers out of China. I mean, hugely bad. They expected 0.8. It was negative 20.5 for retail sales. Horrible numbers. Okay, so the fundamental news here can be your driver of what you think will happen, bigger picture. What do you think is going to happen to other countries now when their numbers come out next month and the next month? If they're also shutting down things for a month or two, you may see a lot more red like this coming out of other areas as well. And so once gold drops to wherever it wants to drop and settle, okay, you could see a lot of buyers jump in to take advantage of those prices. Okay, let's look at the charts. Let's take a look at what happened with gold since we're talking about it. Here's crude oil. We'll look at Nasdaq as well. Let's look at gold. Okay, these are 1 hour candles. Just like we were saying, gold's dropping during a crisis. And you think, why? We talked about it, right? People are cashing it in because they really have fear. They want that cash now to take care of expenses, to take care of their businesses, their corporations, their cities, etc. Okay, and so gold's dropping, and it's understandable when you looked at what happened with the bonds. They stopped paying yields that were worth investing, and people couldn't get a cash return from anything. Think about it. Stocks are dropping. Yields aren't paying hardly anything worth investing to in bonds. Where else could you get money? Where could you get cash? You have to cash in your gold, right? So this is what a lot of people were doing. Gold's been dropping, okay? Today, if we look at the 4 hour candles on gold, let me expand the chart. 1 day candles, look at this move, how easy this would have been today. Okay, this is a support level on the 1 day candles. Support, support, support. This is back to 2019 November. Okay, so this is back November 2019. So we're talking months and months back here. We've got November, December, January, February, March to get to where we are now. Okay, so as we look through these 1 day candles, we see this drop back down, and look where the wicks got down to. We'll go to 1 week candles even, and we see once it got below this support level, let me draw another line. Whoops, I drew a vertical line instead of horizontal. There we are. Here's the 1 week support level. It tested it, came down. Let me get rid of some of these lines. I'm sorry, not this one. Delete, delete, too many lines. If it was going to come down to the support level on the 1 week candles, that would be a move too. It didn't get that low, obviously. It came down on the 1 day candles. This was where we draw our support, and we see it on the 1 week candles a little bit better. Okay, the next levels would be way down here. Okay, we get back towards the 1300 and the 1200 levels. Oh shoot, my chart is not catching up. It's only in, let me see here. It is, okay, March 15th. I am caught up. That's the week of March 15th, which is this week. All right, so here's our support level, and it dropped to about 1450 today. And when I drew it on the 1 day candles, it didn't look as clear. And this is why you want to take a lot of times an inside out look and an outside in look with the candles. And what I mean by that is, when you're doing technical analysis, look at the small picture, but also the bigger picture. So you might look at 1 hour candles, 4 hour candles. And as you look at 1 day candles, 1 week candles, even 1 month candles, you start to see the bigger picture. And on the 1 week candles, we see resistance, resistance, breakthrough, support, support, 1, 2, 3 weeks in a row, support. And here it came shooting down, and look exactly where it bounced from today. Okay, I know many people, many investors that had just above that 1 week support, right about there. Okay, what kind of pending order would have bought from that support when it came crashing down to it today? What kind of pending order would have bought from that support? Buy stop or buy limit? If this was crashing down, you see the support level, buying from a lower point. If I wanted to program instead of market execution pending, if I wanted to have programmed to buy from this lower point, that's a buy limit. Okay, so that was a good move as this was dropping down today to that support, to take a shot at buying up off of that support because it had been there for so long. Why would I buy up in such a strong downtrend? Potentially because, you know, gold is a safe haven. And, you know, I don't think it's going to go down forever, right? And so when you find a major support level, like 1 week candle support level that's been there for over what, 4 or 5 months, 3, 4 months, look what happened. It responded quickly and bounced off of it. When we look at, okay, this movement, how much was that? Look at 1 hour candles. That movement is right here. That little bounce off of the 1 week support, it went up exactly where that 1 week candle support was. Like textbook bounce off of a support level, and it went up from 1450-ish to 1490 is where it is, and it actually reached 1520 almost. We're talking $70, $65 bounce. So if you're asking, does gold have the potential to climb? If you've never seen a $60 bounce in the price of gold, you just saw it now. $60 per ounce bounce in literally 1, 2, 3 hours. It came up here, and look, where would you take your profit? Look at this old support level. Support, support, breakthrough. Here's the bounce off the 1 week candles, and look where it reversed from. As soon as it got near that resistance level, right back down. Okay, so right now, because there's such a strong downtrend in gold, taking advantage of the bounces off the support look like nice moves, but then knowing when to take profit is important because there's been so much bearishness in gold as people are scrambling to get cash on hand. Okay, and when things start to calm down a bit, you could see a recovery of gold. Okay, any questions at this point about the support level? It's on the 1 week candles here. Resistance, resistance, support, support, support. There's your bounce. Okay, very easy pending order. Buy limit off of that support. Why would you? What does that have to do with the fundamental news? You might have in your mind, say, listen, gold can only drop so far when there's so much fear in the market, right? It is a safe haven after all. So that bounce made sense. That it took a $55, $65 bounce in 2-3 hours. Huge opportunities. Type okay if you're with me so far. Now, if you think that gold has the ability to drop further, and certainly it could, what kind of pending order would get you in right here if it breaks this support? If it breaks this support, which has been there for about 4 or 5 months, it could have some momentum to go to the next support level, which is here. Okay, that's another $100 down to the next support level. What kind of pending order would get you in maybe in this range in case it breaks the support? Sell stop, correct. Yeah, that's the sell stop option. So as much as it was nice to trade up off the support, you could still prepare in case it breaks down, breaks through the support tomorrow, next week. You could get in on a sell stop with a limited risk back above what at that point would be a broken support. Okay, the opportunities there. Crude oil, let's take a look. Look at this plunge. It's amazing. Remember, we said combination of two things are occurring here. oversupply of oil because of economic slowdown. China shut down for a while. US is starting to shut down. European nations are shutting down their economies because of quarantines. Combination of oversupply and a global pandemic has not been good for those who were buying on oil. Okay, the fundamentals have told us oil would drop, and boy, was that an easy move. It's been dropping and dropping ever since this pandemic started spreading. And extra stimulus to this was when Russia and the OPEC nations got into a bit of a price war and couldn't agree to cut production. Russia in particular decided they didn't want to cooperate with the OPEC nations to cut production. But if you look at the technical analysis on this, here's the one week candles, support, support, here it comes, simple pending order. Why would I put a pending order below the support instead of buying off of it, selling? Fundamental news, right? The fundamentals that we just looked at, the fundamentals have been there for weeks. We've known, wow, this is bad news for oil. So why would you have had your pending order below the support level? Because the fundamentals told you that made sense. So again, that's a sell stop pending order just below the support. Support, it breaks the support, triggers your sell position. And even if you got in after all this dropping, it breaks the support. If this was your entry at 40, it's down below 30 now. That's over $10 profit in the drop, even getting in late on this movement, simply by going with the fundamental news. It really can't get much simpler than that. And this type of entry point allows you to have a small distance to your stop loss, back above the support, and to go with the momentum with the sell stop in this case. Okay? Kelly, correct. The idea here is we looked at the fundamentals first to get an idea of which way we prefer to trade, and then we come to the chart. So the reason I'm not talking about trading on a bounce off of the support level for oil is because there's absolutely nothing happening fundamentally that would make you think oil should bounce off the support. Everything tells you it was going to break that support over the past 3-4 weeks, and that's exactly what happened. Had you put a pending sell stop here, support, support, it breaks the support here, and there it plunged. That's usually what you see many times when a support level gets broke, especially a support level that's been there for months and years. The longer that support level is held, when it breaks, typically the bigger movement you get. Good questions. Delwyn, good question. Will oil go much lower? What did I say about taking an inside outlook? What do we need to look at to get an idea of if it could go lower? We're on 1 week candles. What should we look at next? 1 month candles. Yeah, well, let's take a bigger outside look. We'll see more data. Okay, what do? I can't see enough data with 1 month candles. There's nothing bigger, so now I have to shrink the candles. Okay, you see the little plus minus up here? Just click the minus and watch what comes into focus here in a second. Now you see it, right? Here's the next support level. Here's where we are now, okay? Support, support. Here's the next level down here, right there, okay? So you see support, support, support off here to the left, right here. That was all the way back to 2001 through 2003. We haven't seen prices down here since then. Support, 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 and then up. Well, here we are. We just broke this support level here, and it's on its way down. So if it breaks and starts to run, which it already broke and has started to run, What's this price level? The next support level is on the 1 month candles back nearly 2 decades, a decade and a half back. The next support level is 24.5. Okay, 24.5. So does it have the potential to keep dropping? Sure it does. The potential's there. Is there precedent for it? There absolutely is. Okay, and this is a global pandemic to the likes of which we haven't seen. Okay, now always keep in mind, you could, if you believe that this could drop to 24.5, okay, that's another $5 down in the price of oil. You could make a lot of money with $5 movement in oil. Right now, all of the fundamental news says it'll probably keep dropping, right? But what could happen 5 minutes from now? There could be an article that comes out that says something like, breaking news, Russia and OPEC agree on production cuts. What do you think would happen to the price of oil if that happened? If all of a sudden, remember, there's 2 types of fundamental news. If the fundamental news comes out, the extraordinary type of economic news that you don't know when or what it might be, if that comes out and it's a headline that says Russia and OPEC agree to make big cuts in oil production, what do you think would happen to the price of oil? Boom. Your nice, pretty picture of a downtrend dropping to $24.5 a barrel would completely go probably the wrong direction, go flying up. So what do? Prepare with go with what you know. If what you know makes you believe oil's going to keep dropping, then do that. If you don't believe that, obviously don't do that. But if the fundamental news tells you one thing and you make that move now, a market move maybe, what do you do on the backside in case something comes out to reverse that movement? You can put a pending buy stop above the first resistance level. If it breaks through, you're covering yourself with a buy position, potentially for maybe the same size as your sell to cover yourself, or put a stop loss to limit the potential loss. So you always have to think, or you should anyways, try to think about, what if the news flips? How do I cover myself? How do I manage that? Go with what you know, prepare for what you don't know. Okay, so we see certainly there's room for oil to drop further. Then we go and we zoom back in and we say, okay, 1 hour candles. If you believe things could drop, maybe you don't get in until you see it drop to a new low. When we look at 4 hour candles, look, there's a support level right there. You see it? Support, support, back up. So if you believe that there's enough momentum to make oil drop, then maybe you wait for confirmation of that. You put a pending order below this support level and wait on it. If it breaks the support, your sell stop sells for you. And then you've got another $5 or $4 or $3 before it hits that $24.5 level. Okay. In this case, it's about 28 now, 29, where you'd get in. If it breaks this support, you're getting in maybe 27.5. And that still affords you another $3 drop before it hits that support level. And in that case, you're waiting for confirmation of a continued downtrend. Many times that's a nice way to go. You certainly don't have to do that, but that's one idea. Going with the fundamental news, but also waiting for technical confirmation of a breakthrough of the next support level, which is right here. And if you did it that way, then it's easy to limit your risk. Because once it breaks this support, if it's truly bearish momentum, it should keep dropping. And so you can put your stop loss just right back above that broken support. So if it breaks the support, you're in. If it's a false movement and continues back up and climbs, you're only risking a small amount for a much larger potential gain. Liseth, why might you not buy off the support? Does the fundamental news support oil climbing? No, exactly. The fundamental news supports oil dropping, doesn't support oil climbing. Now, You can still buy off the support. I'm not telling you not to, but then you are going against the fundamental news, which sometimes you can win even trading against fundamental news. But the idea of this webinar is maybe combining what we know about the fundamental news to trade with the fundamental news from appropriate entry points. You might be more comfortable waiting. If you think oil will go back up potentially, maybe you wait for it to come back to this resistance level, right? It gapped down, it opened today. If it comes back up to the resistance, you could have a sell limit ready to go from that resistance up here. And the fact that there's a global pandemic, economic fear all around the world, if this comes back up to this resistance level, there's a good possibility that it drops right back down off that resistance like it did here. It gapped down, dropped. You could have sold as soon as it returned to the opening price area, it dropped back down again. Opened here, returned. As soon as it hit that gap, down it went again. And so if it comes up again, perhaps that happens another time. Okay. So I personally don't prefer to trade against the fundamental news. Liseth, you certainly could. Again, this is not financial advisement. You can buy off that support level if you wish. The momentum maybe is in the other direction though. Good question. Okay, let's look at the Nasdaq. Obviously, trouble, right? 4-hour candles shows a huge downtrend. If we look at the 4-hour candles, we can see that each time we get a pullback up, here's the pullback up. Once it reaches a major resistance level, okay, that's not what I wanted. We want a horizontal line. There it is. Once it reached this resistance level up here, which was an old support level, okay, support, 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 breakthrough. Once it got up to a strong enough resistance point, right back down it went. Okay, so can you buy in the opposite direction of the overall fundamental news? Of course you can, right? Here's an example of being able to profit in the opposite direction of the overall fundamental news. But what happened in short order? Within the next day even, right back down in the direction the fundamental news predicts. Okay, so this is a good example that in the direction of the fundamental news, you would have won here, trading down from the resistance. Here's the resistance, trade down, winner. Okay, again, here's the resistance, trade down, winner. Here's the resistance, trade down, winner. But if you tried to do the opposite and trade up from the support, it quickly reverses and goes down in the direction of the fundamental news. Okay, so you would have had in this 2 or 3 months, looking at the 4-hour candles, couple months time, you have a lot more opportunity to win in the direction of the fundamental news compared to trying to fight the fundamental news, which tries to reverse and then plummets further. Okay, I think this screen gives you a good example of how, like you were asking some of you about oil, could we buy off the support? Of course you could. But just like looking at the Nasdaq here, there were spots where you could have bought off of support, but there were a lot more spots where you'd have been correct if you were selling off of the resistance, going with the direction of the fundamental news rather than against it. Okay, here's a support level, false break up and right down, right? Here's a support level trying to form. It climbed for a bit and then right back down. A day later, a day or two later. If you're scalping, yeah, it's easier to go against the fundamental news, up and down, more technical trading. You can ignore the fundamentals on short-term scalping moves. But if you're in it for 2-3 days, a week, those types of lengths of trades, it's really hard to fight the fundamental news for too long, because usually you get what you see on this screen. The overall direction, the large-scale fundamental news wins out, and you're going to have a higher win percentage if you're finding technical entry points, trading down from resistance, if the fundamental news says the asset should drop, until the fundamental news changes. Okay, I think we can all see the drops here from the resistance. Very predictable Nasdaq, S&P, crude oil, etc. What do you think happened to the Australian dollar with all those bad numbers coming out of China? What do we know about the Australian dollar? Who's the biggest buyer of exports from Australia? We'll take a quick look at the Australian JPY maybe, and then we'll have to call it a night, I think. So, yeah, good one. Trend is your friend. Don't go against it. I agree with that a lot of times, unless there's a reason to go against it. Delwyn, yeah, China. China's the biggest buyer of exports out of Australia. You saw those bad numbers I showed you guys. Let's go back. I'll show you real quick. Here, this was last night. China fixed asset investment. I mean, that is just a ridiculously bad number. They expected it to go down from 5.4 to 2.8. It went to negative 24.5. Similar story here with industrial production. Instead of just dropping to a lower increase, it went to 13.5% in the red. Just really bad numbers. So when there's bad numbers out of China, typically the Australian dollar becomes very weak. Okay, so let's see if that was the case. If you'd have looked at these numbers last night and traded in the proper direction fundamentally with the Australian dollar, let's see what would have happened, just as a demonstration of using fundamental news. Australian JPY, it crashed, right? Market opened, closed Friday here. Market opened today here, Sunday night / this morning. And these are 4-hour candles, right? I'm sorry, we're on 4-hour candles. So this is actually back further. It crashed. Obviously, there's been bad news out of China for a long time. So we can look back weeks and say it's been crashing, right? Why is it crashing? Bad news out of China. Then let's zoom in off 4-hour candles. Let's go to maybe 30-minute. And what happened today with today's movements? Also down, right? So if you're looking for technical entry points in a downtrend, and we're looking at market opened right about, let's get to the right spot. Here's the 15th, which was Sunday night. This is where the markets opened up, right in this area. Let's take a look, 15th. And that's still the 15th. Let's find the last candle before we get to Friday. There's the 13th. So Friday's close was here. Friday's close was right here. All right, let me draw a line. So markets opened right in this area, and you see it dropped immediately. And then the China numbers came out, and what happened? Further dropping. Okay, so predictable. So once you knew the direction of the fundamental news, right? Once you knew the direction of the fundamental news, the market opened on the 15th, actually here. I apologize, right here. This is the area where the market opened, here, 15th. 13th is Friday, 15th started right in this area right here, okay? And so these red candles were the beginning of the market this week, and then the announcements came in right about here. Okay, a few hours after the market opened, and what happened after the announcements? Down. Tried to pull back up, down. Tried to pull back up, down again. Okay, so if you were doing your technical analysis, you had a lot more potential to profit going in the direction you would think based on bad news out of China. If you're saying fundamental news says sell on the Australian, every time the Australian came up, here it came up to a resistance level, sell. That's a big winner. Here it comes up, sell. Here it comes up, sell. Okay, you get the idea. You draw your parallel alleyway as it was dropping. Each time it came up to that slope, sell. Came up to the slope, sell. You'd have been winning all day. Okay, and honestly, you could have been winning all month. Trading against the Australian dollar, pairing it against the yen, which is a safe haven currency. Tends to strengthen when there's bad news out of China, and the Australian tends to weaken. So they're good to pair against each other during this type of news. Delwyn, any economic talk or decisions coming out of any major governmental entity, when they release their minutes from the rate decisions and all of that, you're going to have a lot of volatility. And so certainly it can be worth trading. But think about the volatility. Pick your entry points according to the fundamental news. Be patient for those entry points and go in the direction that makes sense. Don't just jump in because it's moving and jump in quickly without thinking it through. Wait for your entry points. If you miss the first entry point, wait for it again. Go in the direction that makes sense. Remember, hindsight's 20/20. Once you know the news, then you know the direction you prefer to trade. Wait for the best entry point before you trade, to go with the direction that makes sense to you. Too many traders try and rush their trades because they think they've missed it and they're going to miss the next one. That doesn't have to be the case. Be patient. You can see here, if someone missed this drop, they said, oh, I missed it. It dropped 50 pips. I missed the Australian dropping after the bad news out of China. Look, it came back up to the slope. Trade again. If you missed this big drop and you think, oh, it's over, I missed it. It came back up to the slope. Trade down again. Okay? You get more opportunities. The market doesn't stop just because you missed your first opportunity or second. Okay? Be patient. Use the technical analysis to find entry points that are opportunistic for the direction that the fundamental news in your mind tells you you should trade. And I promise you it can improve your win percentage if you do that. Okay? You're never going to win every move, but if you risk manage properly, you can hopefully come out on top more than the bottom, right? All right, great, everybody. We've been going for near an hour. I think we'll stop here. I think there's a lot of movement to come on oil, on gold. Gold could retest that support level down around 1450. You could keep your eye on entry points. If it hits the support again, it might bounce or break through. If it breaks the current resistance it's on, you could have a buy stop on the way up. You don't have to guess the market. You can prepare for both directions with limited risk. Okay, the indices also. You can expect big movements still. Find your entry points, go in the direction you believe in, and I promise you can find some profits. Okay? All right, thanks for joining. We'll be at it again on Friday. All right, bye for now.